All right, this question was out of 40. I sent it in the group. All right, so I sent together with the notes. All right, those notes were sent by Olutu, okay, our group secretary. All right, so all right, when you're approaching a question, start with the required. The required is saying, and remember, it's question one. We're only going to do question one. All right, calculate Crystal Private Limited's normal tax liability for 2024 year of assessment. Provide brief reasons for amounts that have a nil effect on taxable income. So provide a reason. So for you to provide a reason, you need to understand why, right? So the reason why they're saying provide a reason, they're not trying to stress you, right? To me, right? They're not trying to stress you and Tabi. They're simply trying to say, okay, just in case you become a consultant, you need to be able to explain to someone why there is no tax on that figure or why that amount has been used to certain what amount. There should be a reason behind it. Okay, so they're training us. Okay, so we'll get there. So they are saying reference to legislation and court is not required. But for the sake of the class, I was giving reference to the legislation, right? The sections. So I was writing sections so that you get used to them. All right, so let's go to the information. It's very, very long. So they're saying Crystal Limited is a South African resident company with a 31 March year end, very important. Remember, when we're doing the gross income and the general deduction formula, we were what we're doing here, what? In the year of assessment, in the year of assessment, in the year of assessment. The reason is because SARS wants you guys to calculate your tax returns as a company for that 12-month period. Where it starts and where it ends. That's your tax that you should calculate and either pay or they refund. All right. The company is a leading manufacturer and distributor of float glass, laminated glasses, and various mirror products to customers in and outside South Africa. That means these guys sell to the what? They're exporters. They sell to foreign customers. Crystal is registered as a what? Category A vendor for tax for VAT purposes and is not very important. Very important statement is not because it will affect the treatment of your assets, right? If it's a small business, okay? Because SARS will treat a small business differently from what? From a big business, okay? Just as you treat someone younger, all right, to someone older, the way you talk to them, the way you treat them is different. So SARS does the same thing. So therefore, as a tech student, you should know if a question is saying is a small business, how does SARS treat the same transactions that would have been faced by a big business? How does SARS treat those transactions when they're dealing with the all right. And then so small businesses are governed by section 12. So if you see any section 12E, capital E, that means it's a small business. But this one is saying not, okay? Not a small business. Okay. And then they are saying these guys have been approved by SARS as a what? As a manufacturer. As a manufacturer. All amounts exclude VAT unless otherwise stated. Yay. Okay. All right. The following income and expenditure statement was prepared by Crystal's accountant for the financial year and 31 March 2024. So you see now they've even changed the layout. They are now saying the accountant prepared this, meaning to say that you are going to take the information prepared by the accountant and apply tax, okay? And apply tax rules, right? And apply tax rules. Because I think students are cramming taxation, but they're not understanding what's going on. Right. So students are not doing that. So the reason is because we just want to pass, but later on you discover, I want to continue with my tax, but you forgot all those things. All right. So the following, there is the income and expense statement. So you see, they're giving us income and expense, your profit and loss. Okay. Then from that, you are supposed to calculate the tax line. So they are training you in the real world. We prepare the tax returns of a company based on the what? On the income statement. So there is your revenue, cost of sales, investment income, expenditure, depreciation, payment to Mrs. Van Lau, net profit before tax. So if you are an FAC 3764 student, That's why they say what? Calculate the current tax and start with the profit before what? Tabi?
Before tax.
Exactly. Exactly. Then you are adjusting any information that does not belong. So we are going to do that method. It's also there. It's also examinable for this module where you are using the net profit before and you are reversing. So at least they gave us the entries. Then they gave us this. Sometimes they will give us this. Then they want us to make adjustments. So they are saying, yes, in that revenue from sales made to customers situated outside South Africa amounted 1,034,000. You see? So what do you know about sales outside the country by a resident company? Does sales tax, is that part of gross income? Section 1, yes or no? It is. But right. Yes. If you are exporting, I didn't say VAT. We're dealing with income.
Okay. All right. No, it is.
It
I was
is.
thinking about VAT.
Yes. Don't mix VAT and this. Right. Do you understand?
Yes, Jeff.
VAT, yes. If you're exporting for VAT purposes, yes. The VAT amount on that, there's no VAT if you're exporting. But now we're talking about income. Now we're talking about what? Gross income. Now we're dealing with section 1. So there is the figure. There is the initial revenue, right? Of 3,450,000. There it is. So they gave us a note. That's why we went and read there. So they are saying this amount is not included in the above income and expenditure statement, if you can hear me. So we just need to add that and that. So I had already drawn. So if you want to draw with me, I can wait for you. Okay, so this is where I started. Right. So I was just highlighting the sections that were being tested on. So here is section 1. This will qualify as gross income because it's in the what? Because sorry, it's income in cash actually received, all right, in favor of us. Okay, not capital in nature. So we include that. And the same will apply. So if you're a company that has customers, that has foreign customers, that income that you receive from them, for the sake of your income tax, you include it. All right, so that's what you come and do. So remember, I didn't say write these sections. I'm just referring, just to remind you and make you guys familiar with taxation. So section 1 was being tested. Did you understand your gross income? Right. So as long as you're a resident, right, and receiving income worldwide, SARS will tax you worldwide. Okay. So that is what they'll test. So you are including no brackets. Okay. So if it's deductible, that's when we come and put brackets. Anyone with questions with the first one? Perfect. Right. We go to the second one. Okay. So what I'm teaching you will apply to other questions. So if you see any question now with foreign sales, for the sake of income tax.
Hi, Jeff.
Yes.
Why
Sorry, come again. Right. So let's go into note 2. Right. Note 2 is saying the cost of sales amount was determined as follows. So you know from your accounting, what makes up cost of sales? It's opening stock plus purchases less what? Closing stock. Né? Then you get your what? Your cost of sales. Yes, but for tax purposes, you need to open up that cost of sales and deal with the what? With the items making up cost of sales. All right. So when it comes to opening stock, you deduct. Okay. Opening stock, you deduct. Right. Opening stock, you deduct. Right. Then purchases, you also deduct. Remember, purchases, you are saying now you are being tested on which section? Who remembers? Section 11, what? A. Right. What is the definition? What is the definition? Carrying on a trade.
A trade.
Yes, expenditure or loss actually incurred in the production of income.
Income. The
Right.
assessment.
Assessment, yes. What's the last
Or
one?
capital in nature.
Yeah. So you see, that's why you use that definition. So the reality of that definition is, Tabi, when you come across an expense, the only way that you know if an expense is deductible by SARS, it has to meet section 11A, whatever expense you incur, whether it's a new one, whether you are going to space, whether you are going to Mars, right? because it hasn't been addressed. In order for you to determine if it's that expense that you incurred as a company is deductible, you need to satisfy all the requirements of SEN. That's how you qualify. And whether you are buying a Coke because it's hot, whether you're doing training or anything that you're doing, Section 11A. Together with what? Section 23. All right, for prohibited deductions. Remember, we did all these things. We did all those definitions, and we even wrote a test. We even revised on those. So go back to those things. Don't forget and say, I'm now looking at 2 things, because they'll test you, they'll throw in something, then you fail. Right, so this, when you're purchasing stock, is for the sake of trade, something that you're going to either sell or use in production. So it's in the process of what? Production. That's why you deduct expenses, Pumza. That's why purchases are in brackets. All right. And then we've got closing stock. In closing stock, we add back. Nah? That's what they say. Closing stock, you add back. Right. When you add back, but there's a story here. So if you want, so remember, these amounts we're making up this 887. So you don't touch it anymore, because you're dealing with the individual things that make up this figure. So you then forget about this. But the rules are, if you always remember, opening stock, subtract. Purchases, subtract. Closing stock, what do we do?
Add back.
Thank
We
you.
add.
Yeah.
We
Yeah,
added.
ngeke ufail ungacabanga kanjalo. Right, you never fail. Right, then they're saying the accountant was uncertain on how to account for the closing stock. On 31 March 2024, it was found that some of the closing stock items were damaged to the extent that it would be unethical for Crystal to what? Distribute them at a discounted what? Selling price. These closing stock items were included in the what? In the above. So this word makes a difference. So this amount is sitting in this 241,500. But SARS is saying that you add back what? Closing stock. But now they're saying within your stock that you have in hand, there is some stock that is no longer sellable. So what they're simply saying to you is that subtract that stock. All right, because it's damaged. Subtract it from your closing stock and account for it as an expense, because you cannot sell it anymore. So it becomes a what? An expense. So you can deduct it. SARS allows you to what? To deduct that. Are we together there?
Yes, sir. Yes, sir.
Right. So there is this is stock. Anything to do with stock or inventory is governed by section 22, right? Right. That is what governs that. So there I was subtracting purchases, subtract. Then this man has this. So I was not doing the actual calculations. I was just writing down. Then say you guys will do it together. Right. So what you get there?
199,700.
Okay, add back. And then the damage is given, you come and subtract it. All right? Because SARS is saying, okay, you can no longer sell that anymore. So deduct it. Because initially you had brought to what? To sell it, that you make income, then we tax that income. So we are fair, we understand as an organization. I can't say as an organization, right? Right. So subtract that cost from your tax return. All right. Any questions with 2?
Oh, Jeffrey.
Yes.
Sir,
Yes.
why are we having 2 columns? We text when we see comply.
Ngizokuchazela, it will be easy. I'll show you.
How will I know ukuthi kumele ngifake kule column and kumele ngifake kule ngala? Why not?
Yeah, ngizokuchazela, Sophia. I'll show you those transactions that make you have this second column. So it's not a transmesh if you don't have it. It's not a trans. Don't think it's a rule. It's not even there in standard. Say it's a must that when you're calculating tax you have 2 columns. No, it's not. But I'll show you why. So for what we've done so far, it doesn't apply. But now there are transactions that you enter into as a company that will recommend or that will force you, right, to have that second. So I'm stressing I want. Finally, we're right. Then we're done with that. And then we go to 3. So 3 button from the statement. Right. So there was investment income. This company was receiving incomes, right? In accounting, that is other income. Okay. We just add everything. But SARS has rules. Okay. So do you understand what's happening? If you're the accountant, Any incomes that you get, you add them. But SARS has rules on how much you can include, whether everything or nothing. Right. During the financial year, Crystal embarked on a quest to diversify its investments. Below is a summary of the returns earned on the company's individual investment for the 2024 financial year. Right, there it is. Total interest earned on the company's what? Only fixed deposit account amounted to what? This. Right. What section is testing this one? With section by law, if you were the accountant preparing the tax returns of your company. But test IEP section. Section 1, gross income. Do you understand why? Today is just me and you guys.
Oh yes,
Jeff,
Jeff. I think I do.
Mina Jeff nginkinga nama-section, even though I understand, but I cannot really code the sections.
Zofunda, the more I call them, the better you become. That's why I'm calling them out.
Okay, Jeff.
Don't worry. All right, gross income is section 1, guys. It's the first section of income tax. Usazuthanda imali. Okay. When you want to get employed, what's the first thing that you're going to ask?
Salary.
How much am I
tax.
getting?
Tax registration.
Ah. You see, yes, exactly. Uhola malini. So that's why also gross income is important to SARS. That's why it's the first section, because they want to collect. So they need to tell you about the collections. Then they will give you the deductions later. That's why much deductions abuya section 11 le 23 kushiyale yabona. So the first one is section 1, gross income. How much should you include from your sources? Let's address that fact. So that's how you should think. Then you won't forget. You're like, oh, first section. Yeah, that's why. Okay, just create something in your brain. Okay, then gradually you grow into this. So gross income. Although you can explain why we are including this interest end. Why are we including the 75?
I can see the explanation. It says total amount, then it said in cash or otherwise. So and it's received because it says received or accrued.
Yes.
Then
An
in the year
interest
of
end, you say.
assessment
Received. So
or
it's received
accrued
by,
too.
yeah,
So
but
this is received.
received, yeah?
Yes,
In the year.
of assessment.
You section 1 definition. What we're doing for your. Then what?
Then excluding receipts of capital nature.
Excluding receipts of what? Exactly. So is the interest end capital in nature?
No.
No, the investment is capital.
No.
Yeah. Why shall stay in. So the capital in nature is the
investment.
So whatever you get from the investment, what you get from the investment, my interest. So these are the fruits. So according to section 1, the fruits are included as your what? As our cross, as part of our crossing. Does it make sense?
Yes,
Yes. So that's why now when you sell the investment, Maungas iPhone investment, the generator, when you sell it, that investment, then you're attracting capital gain. So after these topics, we then go into capital gain. All right. So everything is coming together. So that I remind you what's going on, where we are. Right. And then so you include it, no brackets, because it's income and no brackets. Okay. And then local dividend, right? It's according to section 1, we're going to what? Include it, because it is what? So this one you included under special inclusion. We didn't do special inclusions, eh? Yes, sorry, we didn't do special inclusion. I think I was rushing because of the exam. So according to special inclusions, right? Any local dividend, if you receive a dividend from DSTV or Bitvest or Capitec or Standard Bank, right? According to section 1, all right, according to section 1, right? According to section 1, you include it, right? You include that. So no brackets. But now there's a second section, sorry, ekhuluma ngama exemption, all right? To say any local dividends according to section 10, right? 1K is what? Is fully what?
Exempt.
Is fully exempt. But I'm not saying cram this section 10. When what you're supposed to know is that any local dividends are exempt. Start there. Then you'll grow into the section to say, oh, it's section 10, 1K. So you first include, to get the full marks, include, because section 1 says it is gross income, include. But now we are saying within that gross income, there are some incomes that you received that SARS exempts. Then you go to section 10 to support yourself. Then you remove it. Are we together?
Yep.
Yes, sir.
Ngiyandifundisa tax. Now you can go do your tax
So
things. Yeah, you'll be fine. Yes?
I have a question, say lapha ku-exempt.
Yeah, but exempt.
Kambe u-exempt uchaza ukuthi no VAT or
Hayi, no VAT.
Not,
Ungayifaki. No
not
taxable.
tax.
No tax on it.
oh no tax. Okay, okay.
Suzweli.
Yebo sir.
Omunye ukhona omunye? Anyone that has problems?
Let's move.
Right, let's move usithele. Kuba yi-tax action. Right, for a practitioner, consultant, you make money. All right, or do people tax returns, company tax returns? This is what you be doing. Thola ukuthi bathole foreign local dividend, you know, or section 10, blah, blah, blah. So that's what you be doing. Like it takes, I can do it. Once you know that section, you know it for life. Right, so let's go into the other ones. Now there's a dividend amounting to 53,200 were received in respect of a 15% interest held in an equity shares and voting rights of A Innovations, a company based in Sweden. Right. So first thing, number one, when you are given a foreign dividend, right? Start with this percentage. It changes everything. Right. You analyze the percentage first. Okay. We know it's from a foreign company. Okay, because Sweden is in Europe. All right. And then this is what they gave us. So 53 is, you come and do the same thing. Right. Foreign dividend, right? You say, I'll just write Sweden. Okay. So according to section 1 as well, section 1 will guys include, that's why it's gross. Before you start subtracting, it's gross. Anything that's gross, we're saying everything, okay? Excluding capital in nature things. But otherwise, all incomes include. Then from within what you included, now we apply other sections that allow you to remove some of those incomes so they are not taxed. So SARS says, if you have got a foreign dividend and you have got an equity of what? Of 10%, at least 10% and above, right? Therefore, that foreign dividend is also what? So there is section 10B2 addressing that one. I'll just call them, don't worry. I didn't say cram them. I didn't even put you guys under pressure. Right. Nizowabamba at your own time. So according to this happens if you are holding at least 10% and more. So how many percent are these guys holding in the Swedish company?
15%.
So if you're holding 10% or more, that dividend is fully exempt as well. Usazi guy tax. All right.
Can you repeat that?
If you're holding shares of 10% or more in a foreign company, it is fully exempt. I tax. Right. Then I know you're asking, what about if it's less? That's why they gave us another question. Right. They are saying 5% interest held in equity shares and voting rights of E Industries, a manufacturing company effectively managed in what? In France. How much are we holding this time?
5%.
5%.
So it's less than what?
10%.
10%. So Leo is partially, we are deduct high on partially. Right. So include that is for how much? It's 44, 200, 100.
It's 44, 100.
Right? So we include according to section 1. Section 1 would include all incomes, right? Then now, according to section, let me write, I was writing, right? So it partially exempt, right? Section 10B3, right? So SARS now says, okay, because you are holding what? Less than? Right, so write down these things because these are the things that will either help you or destroy you in terms of time, right? It's less than 10%, all right? So if it's less than 10%, SARS says, okay, if you're holding less than 10% in a foreign company, don't deduct everything. only deduct how much? 7 over 27 times the value.
Sorry, Jeff. When do we use 25 over 45?
Individual.
Individuals.
Stay on a foreign total always one. If it's individual, then 25 over 45. Companies 7 over
27.
Oh, Jeffrey, u7 usuqhamuka kabi.
7 wandi kumele ube mazi.
Kumele ngimazi?
Yeah, kumele umazi nje. It's from
Oh,
section
okay,
10.
ngiyazwe because ngiyawaunderstand on 27, but u7 lo ekade
7. It's 7 over 27 times. Did you get that, everyone?
Yes.
Yes, sir.
Yes, sir.
So that's why I like this question. It was it had good stuff. So therefore, it's going to be 7 over 10. It's not percent. We tatinjal. Don't ask where it comes from. I don't even know. When I just memorize the fraction, it's up to you. How much do we get there?
11,433.
11.
That's what you're allowed to. Not everything, just that portion. That means the other side is going to tax. Right. So we've learned a lot: local, foreign dividend, interest. And now you come across any question, that's what they'll be examining. Now it's up to you to remember. I've done my part. Okay. So